Hey guys, so today we're going to be talking about the stock market and the bond market and how these markets provide information to businesses. So, to begin, as usual, let's define our terms. So, the stock market, in the stock market, basically, you there is the selling, buying of stocks at its most simplest. So, stocks are financial securities, FinSecs, that represent partial ownership in the firms that issue these stocks. And in these markets, you have the issuing of new stocks and resale of stocks that had already existed. Similarly, in the bond market, you have buying and selling of bonds. Bonds are also financial securities, but they do not represent partial ownership in firms. They actually represent debt for the issuing firms. And in this market, you also have issuing of new bonds and resale of bonds that had already existed. So now that we've kind of defined both of our markets, we want to answer the question, how do these markets provide information to businesses? And simply put, this has to do with why stock and bond prices do change over time. So let's go into this a little bit. So basically, movement in prices of bond and stocks in their respective markets give info on the financial status of the firms that have issued them. And based on this info, the firm's managers can kind of decide on, what the firm should do. So, since stocks represent partial ownership of a firm and, also the claim of the profit, so changes in prices of stocks actually represent profitability of the firm itself. So if the price of a corporation stock increases, investors are confident, and this gives a signal to the managers that they can go for, for example, expansion of business. But on the other hand, if the price of a corporation stock decreases, investors are not happy and they don't think the corporation is going to earn a lot of profits in the future. So managers should make business decisions such as reducing operations or something of that sort. And in the bond, so the bonds represent debt of the corporation. So changes in the price of bonds shows the debt paying ability or capacity of the corporation. So changes in bond prices reflect debt paying ability of the corporation. So basically, if the price of a corporation's bond declines, it's kind of a signal for the managers that investors don't think that the corporation is really going to be able to repay its debt on the date of the bond's maturity. And managers in this case would be like, okay, we have to improve the financial health of the company. Otherwise, it's not going to look good, and we're not going to be able to raise even more debt. But on the other hand, if the price of corporation's bond increases, investors are feeling pretty confident and they think that the corporation is going to repay its debt. And at the end of the day, they say, okay, it's going to be easier for us to raise new debt, and cost of raising new funds would be lower. But also on a bigger picture, kind of the overall economic cycle of, like booms and busts, so we say, is kind of responsible for changes in prices of stocks and bonds as well. Economic boom is basically economic expansion, increase in employment, employment, therefore income and profits. And as profits increase, we see that stock prices increase, as we talked about earlier. On the other hand, unemployment and decline in level of output would kind of reduce profits and declining prices of stocks. And pretty similarly, income and output increasing during booms creates confidence in bondholders, and they're like, okay, our debt's going to get repaid, versus in busts or recessions, declining income and output would basically cause bondholders to say, okay, it's unlikely that our corporations have the capacity to repay our debt, and prices of bonds will therefore decline. So I hope this helps. Overall, these cycles kind of affect why these prices fluctuate. And going back to our original question, the fluctuation in prices of these stocks and bonds kind of provide information to businesses over what's going on and what decisions the management should make.